Imagine waking up in a world where every headline about Bitcoin is more astonishing than the last. Each time you check the price, it isn't just inching higher, it's shattering records, leaping into territories that even the boldest dreamers once dismissed as science fiction. Picture a future where talk of crypto winter is history, replaced by a new era of relentless growth. The big question echoing from the skyscrapers of Wall Street to the tech campuses of Silicon Valley is this: could Bitcoin truly rocket to $1 million per coin? And if it is possible, what seismic forces are fueling this incredible ascent? To unravel this, we must journey back to Bitcoin's origins. In its infancy, Bitcoin was a digital curiosity championed by cryptographers, libertarians, and a handful of tech visionaries. It was dismissed by the mainstream as an experiment destined to fade. Yet, over the past decade and a half, Bitcoin has undergone a radical transformation. What began as a fringe movement has become a juggernaut reshaping the very core of global finance. Today, Bitcoin is hailed as digital gold, a hedge against inflation, a bastion of financial autonomy, and an emblem of the internet age's shift in power. The road from obscurity to mainstream has been anything but smooth. Bitcoin's history is punctuated by spectacular booms and devastating busts. Regulatory threats, exchange hacks, and wild price volatility have tested even the most hardened believers. Yet, with each crash, Bitcoin has not just survived, it has rebounded, stronger and more resilient. Skeptics have repeatedly declared its demise, but Bitcoin's obituary is yet to be written. Fast forward to the present. In the year 2024, global crypto adoption has climbed to about 7%. Meaning over 560 million people worldwide now own some form of cryptocurrency. In the United States, the adoption rate soars even higher, with more than 14% of Americans holding Bitcoin, according to River Financial. What's remarkable is the shift in who is participating. This is no longer a playground for hobbyists and risk-takers. Corporations, trillion-dollar asset managers, and even governments are making moves that would have seemed unthinkable just a few years ago. Consider the tidal wave of institutional money. Major players are now funneling billions into regulated Bitcoin exchange-traded funds, or ETFs. In the last quarter of 2024, institutional holdings in spot Bitcoin ETFs reached nearly $39 billion. This isn't speculative dabbling, these are large-scale, strategic purchases. Look at MicroStrategy, under the relentless leadership of Michael Saylor. Since 2020, the company has accumulated 582,000 bitcoins, currently valued at over $63 billion, an unprecedented corporate treasury move. Saylor's philosophy is clear. If Bitcoin's not going to zero, it's going to 1 million. But what's driving this institutional gold rush? The answer lies in the laws of supply and demand. Every day, only around 450 new bitcoins are mined, totaling roughly $50 million at current prices. Saylor and others highlight a crucial detail. Public companies, ETFs, and even some governments are now buying up nearly the entire daily supply. With each halving event, like the next one scheduled for April in the year 2028, the daily flow of new coins is slashed even further. The supply squeeze intensifies. More buyers are chasing fewer coins. Let's dig deeper into the halving phenomenon. Bitcoin's protocol is designed so that, approximately every 4 years, the reward given to miners for processing transactions and securing the network is cut in half. Historically, these halving events have triggered powerful bull runs. After the 2012 halving, Bitcoin soared from under $15 to over $1,000 within 2 years. After the 2016 halving, the price raced from under $700 to nearly $20,000 in late 2017. And following the 2020 halving, Bitcoin rocketed from under $10,000 to over $64,000 by early 2021. The pattern is clear. As new supply dwindles, scarcity drives price discovery to new heights. This dynamic is now supercharged by the arrival of institutional capital. The approval of Bitcoin ETFs has opened the floodgates for pension funds, insurance companies, and sovereign wealth funds to gain exposure through regulated channels. Just consider that, in the fourth quarter of 2024, institutional spot Bitcoin ETF holdings exploded to nearly $39 billion. At the same time, corporate Bitcoin holdings have surged by over 300% in 2025 alone, outpacing the rate at which new coins are created. Experts are weighing in with bold predictions. ARK Invest, led by Cathie Wood, has raised its bull case target from $1.5 million to $2.4 million per Bitcoin by the end of the decade. Bernstein analysts foresee $200,000 as soon as 2025, citing institutional flows as the main driver. Standard Chartered and Bitwise Asset Management also estimate Bitcoin will breach $200,000 within the next year. Tim Draper, the legendary venture capitalist, expects Bitcoin to hit $120,000 by the end of this year, driven by its clear advantages over traditional fiat currencies. Arthur Hayes, former CEO of BitMEX, believes that expansionary monetary policy and mounting national debts could propel Bitcoin all the way to $1 million by 2028. But what about the skeptics? Can the price of Bitcoin really keep rising forever? The market is caught in a high-stakes tug-of-war. Long-term holders, sometimes called hodlers, are steadfast, refusing to part with their coins. Institutions are racing to secure their share before the next supply crunch. Yet, risk hovers on the horizon. What if governments impose sweeping new regulations? A sudden tax, a hostile tariff, or a clampdown on crypto exchanges could spark a sell-off. Earlier this year, a surprise policy move from the United States administration triggered a 40% plunge in Bitcoin's price practically overnight, reverberating through global markets. Technological risks are ever present as well. While innovations like the Lightning Network have improved transaction speeds and reduced costs, the threat of security breaches, software bugs, and even quantum computing looms. Environmental concerns persist too. Bitcoin's energy consumption is frequently criticized, although recent trends toward renewable-powered mining are helping to address this challenge. Meanwhile, the rise of central bank digital currencies, state-backed digital money, could either legitimize or undermine Bitcoin's role in the global financial system, depending on how governments choose to integrate or compete with it. There's also competition from newer, faster, and more efficient cryptocurrencies vying for the title of digital gold of the internet age. Despite these clouds, optimism about Bitcoin's future remains strong. Bernstein, Standard Chartered, and Bitwise all predict prices above $200,000 in the coming year. ARK Invest's vision is even more audacious, imagining nearly $2.5 million per coin by the end of the decade. The conviction among long-term holders is striking. On-chain data shows that more than 70% of Bitcoin's supply has not moved in over a year, a sign that many investors are betting on a future where a single Bitcoin could change not just individual fortunes but entire nations. Let's imagine some possible futures. In one scenario, Bitcoin becomes a digital reserve asset for the whole world. Sovereign wealth funds, pension funds, and even central banks hold Bitcoin alongside gold and government bonds. Public companies use Bitcoin as a treasury reserve to hedge against currency devaluation. In this world, demand soars as new supply keeps shrinking, and the price could plausibly climb to the $1 million mark. Michael Saylor puts it bluntly. At current trends, public companies, ETFs, and even some nation-states are buying up the entire daily supply. If Bitcoin's not going to zero, it's going to 1 million. But the road ahead is not guaranteed to be smooth. Regulatory uncertainty is a constant threat. A single signature from a president or prime minister could change the rules overnight. We've seen how sudden tariffs or taxes have triggered massive sell-offs. Remember that brutal 40% crash after the United States administration's policy reversal earlier this year? Imagine similar moves spreading to Europe, Asia, or emerging markets. Technological evolution is another wild card. On the one hand, advancements like Taproot, Schnorr signatures, and Layer 2 solutions such as the Lightning Network are making Bitcoin more scalable and user-friendly. On the other, the relentless arms race between hackers and defenders continues. A major security flaw or successful attack could shake confidence and trigger a selling panic. There's also the looming specter of quantum computing. While experts believe quantum attacks are still years away, the Bitcoin developer community is already exploring quantum-resistant upgrades. Environmental sustainability is under the microscope as well. Critics argue that Bitcoin's proof-of-work mining consumes vast amounts of electricity. However, the data shows a shift. More than 50% of the network's hash rate now comes from renewable sources, and mining efficiency has improved dramatically. In regions like Texas, Iceland, and parts of China, miners are tapping into surplus hydropower, wind, and solar. The industry's push toward greener practices could help secure Bitcoin's long-term social license. Meanwhile, central bank digital currencies are gaining traction. China has rolled out its digital yuan to millions, while the European Union and United States are exploring their own digital currencies. These state-backed tokens could coexist with Bitcoin, or they might be used as tools to restrict or compete with it. The outcome will depend on policy choices made in the coming years. There's also the competitive threat from other cryptocurrencies. Coins like Ethereum, Solana, and newer contenders offer faster transactions and innovative features. However, Bitcoin's first-mover advantage, its security, and the network effect of millions of users have so far kept it in the lead as the ultimate store of value. Let's not overlook the macroeconomic backdrop. Persistent inflation, ballooning national debts, and geopolitical conflicts are all driving demand for alternatives to traditional money. In countries facing currency crises, think Argentina, Turkey, or Lebanon, Bitcoin is increasingly seen as a lifeline. In Pakistan, officials are even considering adding Bitcoin to the nation's strategic reserves, following the lead of El Salvador, which made Bitcoin legal tender in 2021. With all these forces at play, the question for you, the viewer, is more relevant than ever. Whether you are an investor, a technologist, or simply a curious observer, ignoring Bitcoin is no longer an option. Understanding the risks and opportunities is essential. This doesn't mean you should rush to invest your entire savings in Bitcoin overnight. That would be reckless. Instead, focus on education. Study the cycles of boom and bust, keep an eye on regulatory developments, and stay informed about innovations in security, scalability, and sustainability. Even if you never own a single coin, understanding the forces behind Bitcoin's rise can help you anticipate shifts in global markets, currencies, and even societal trends. For those considering exposure, diversification and risk management are absolutely vital. Bitcoin's volatility is legendary. Its price has plunged by 40% in mere weeks, but it has also staged breathtaking recoveries. The network has survived exchange hacks, government bans, and brutal bear markets. The lesson? Treat Bitcoin not as a gamble, but as a long-term strategic asset. Diversify your portfolio, set realistic expectations, and never invest more than you can afford to lose. Let's also talk about the psychological side. The temptation to chase quick gains or panic during downturns has burned many investors. Remember, history shows that the greatest rewards come to those with patience and discipline. Many of today's Bitcoin millionaires endured years of ridicule, regulatory threats, and gut-wrenching price swings before seeing their bets pay off. So, as we approach the end of our exploration, let's return to that burning question. Can Bitcoin really reach $1 million? The evidence is mounting. Institutional adoption is accelerating at a pace few predicted. The supply of new coins is shrinking relentlessly. Macro forces, from inflation to debt to digital innovation, are stacking the odds in Bitcoin's favor. Yet, nothing is guaranteed. Regulatory risks, technological vulnerabilities, and fierce competition remain formidable obstacles. The verdict? Bitcoin's path will be anything but predictable. Yet its impact on technology and finance is already monumental. We are witnessing a fundamental shift in how value is stored, transferred, and perceived. Bitcoin has ignited a global conversation about money, freedom, and the future of economic systems. And here's the twist that few discuss. Despite all the headlines, more than 90% of people on this planet still do not own a single Bitcoin. The story is far from over. Whether Bitcoin becomes the digital gold of the 21st century, a global reserve asset, or something entirely unexpected, the next chapters will be written by all of us, investors, builders, regulators, and everyday citizens alike. If you found this deep dive thought-provoking, please like, subscribe, and share your perspective in the comments. Where do you see Bitcoin heading? From spectacular new heights to another wild roller coaster ride. Stay tuned for our next investigation into the forces shaping the future of global finance.